Hey guys, Forex Brizio. Good afternoon, 3:40 p.m. on Tuesday, August 22nd. And back with another video here. And for those of you that still like to use your indicators, this one's for you. And I've made videos about this indicator in the past. I really don't use it too much anymore. But there is still something to it. And the nice thing about this is you can use it for day trading and scalping. You can use it for position trading. You can use this really on any time frame. I'm going to show you mostly scalps and day trades here, which is really when this indicator was developed, which is what the gentleman that created it intended it to be used for, day trading and scalping, but it works fine on longer charts too. So this is the Williams percent range. It's an oscillator, so it's a momentum indicator. It's available in any trading package. This is MetaTrader. It's in here. You just go under your indicators, oscillators, and it's right here, Williams percent range. Now, when you put this on your chart, initially, it's going to show a period of 14. That's what it defaults to. Okay, I have changed it to 55. And you're going to say, well, why 55? Well, because first of all, 55. First of all, the default setting, in my opinion, 14 is way too short. You will get so many false signals, it will whipsaw you in and out of trades. I honestly don't know how he used this indicator on such a short setting. So 55 will smooth it out a little bit. The drawback to doing that, anytime you lengthen it, you potentially will miss some signals, and that probably will happen where you'll miss some trades, because you're drawing it out to a much higher bar as far as the momentum goes. So if the market was not really volatile in the candles leading up to that signal, you might not get it. Okay, so I'm just going to say that up front. That might happen. Now, the higher the time frame you go, the more chance that will happen. On a short time frame, like a 5-minute, there's less chance it'll happen, but it still could happen. All right, so I'm just going to tell you that up front, that you might miss some signals. But it will smooth it out, and it will get rid of a lot of the false signals. Okay, you might still have some false signals too, but you'll have less. And I'd rather miss a trade than take a bunch of false signals and pile up a bunch of losses. Okay, so in my opinion, if I had to choose. All right, so this is the Williams percent range, and we're basically looking at the overbought area, which is this area over minus 20. Or the oversold area, which is the area under minus 80. Okay? And this thing is a fixed range. It ranges anywhere between 0 and minus 100. The only levels, again, we're really interested in is the minus 20 and the minus 80. Now, I believe this thing defaults to minus 30, minus 70, so these lines would be in a little tighter. Okay? But I set them out to 80 and 20. But if you first put it on your chart, you might see this top line at minus 30 and this bottom one at minus 70, which again would bring them up a little bit and bring this one down a little bit more. Okay, that's up to you. I think that would deliver later signals, but again, it could smooth out and get rid of some false signals too if you did that. Okay, so you have to play around with this. Okay, but for me, minus 20, minus 80 is how I like to have it. Okay, so the idea again is you're looking at these overbought and oversold areas, and we're looking at the New York session only, and we're basically looking for signals that the indicator will generate. And again, this is a good entry indicator. It is not a good exit indicator because it's very sensitive. This probably again is the most sensitive oscillator I've seen, even at this setting. You could be like in a trending market and then have this thing, you know, if say it's going up and then you see the indicator start to go down, cross below the overbought line, and you get nervous and you jump out and you have it see it come down only to have it pop back up and you get out too early. Okay, so as far as the exit, that's going to be up to you how you want to manage your exit, whether you want a fixed risk to reward ratio or just a certain number of pips, so you're going to trade back to a previous area of support or resistance or supply and demand area. You're going to use a chart pattern. You're going to use a structure break, whatever it is. I'm not going to try to tell you how you should manage that. Okay? But basically what we're doing is, so let's just take this day right here. New York opens. You can see at the time of the open, we want to see price, we want to see the oscillator, somewhere at or near the opening. We want to see the oscillator in either an overbought or an oversold region. So we come into this session here with the oscillator up in this overbought area, and you can see price comes down, and we do get a little pullback right here. But here's our signal, probably right at the bottom of this initial push down, and price did go down about 60 pips before it reversed. Now we did get a long signal right here. You could take this if you want. I probably wouldn't be greedy, but you could take this long signal back to the upside, and that would yield you maybe another 34 points heading into the end of day. But we're just looking at these initial ones coming out of the open. Okay, now here's an interesting one. Here's the New York Open right here. Okay, you can see price is trading in the overbought area, but the price is down here. Okay, all right. So you basically would have no trade right here because you don't get a sell signal. You really don't get a good sell signal here. Okay, and you really, with price being at the lower end of the with price being down here at the open, you figure, you should be getting a buy signal, but you don't get it. Now, you do get a sell signal later on in the day right here, and you could have taken this for, maybe 10 pips. It's not a big trade. There's a little false signal right here, okay? That's actually before the open, so that wouldn't count. All right, so then if we advance to today, again, we open the day right here, okay, but we're already in this overbought zone, but we don't get a sell signal until right here. So here is our trade for the day. We get this break lower, okay, we get a little pullback right here, but eventually it comes down and picks up about, 33, 35 pips on the swing lower, okay? So that would have been your trade there. And we go back to this one. Right here, again, price opens down here, okay, with the oscillator down in the oversold area, okay, we get a buy signal. Now, if you went in long right here, that's not a good fill. It came all the way back. But even worst case scenario, let's say you got in right here, you still could have picked up 40 pips or so before it started heading back down. And then, of course, again, later in the day, we get a sell signal. Okay, and price continues to go down into the end of the session, another 50 pips. But again, we have a little false signal, false sell right here, and we have another one right here. So this is what I'm talking about, that this thing will give you false exit signals. Okay, if you were going up here and all of a sudden you see this, all right, and you panic and you get out because it's coming back out of the overbought area, and then it happens again here. Okay. And the true sell signal didn't come until all the way over here, okay? So this is, unfortunately, is a drawback of this indicator, that it's very, very sensitive. So let's see what happens. I don't think it'll make a difference in this case. But if we change this to, let's just change this top one to minus 30. Minus 30, this is what I was talking about a few minutes ago. The default levels for this. Okay, so if we change it to minus 30, we do avoid this false signal right here, but we still get this one. Okay, we still get this one. You can see even at minus 30, it still breaks below. Okay, and then for this sell, oops, I gotta close that. For this sell position, that's going to get us a little bit later on the, if you took this sell, that's the drawback. If you wanted to take this counter trend sell position, okay, we don't get that signal until maybe, if you're lucky, you got in at the close of this candle right here. Okay, so it will help you with some of these false signals, but the drawback to pulling in these lines a little tighter is that you could miss a signal too. All right. Let's find a long position here. Okay, so let's go to today. So we said we had a long here, right? No, actually we didn't. Okay, well, yeah, we have this one. So that was, okay, so let's change this line, the bottom line, to minus 70. Okay, and minus 70 is the default, the other default setting. And let's see what that does to our entry signal for this long. Okay, so if we change this to minus 70, you can see that our entry signal, we still get this entry signal right here, and then we get the big pullback, okay? Let's see, it's right there. I guess it's technically at this blue candle right here. And then we get the pullback, and then it goes. So it does, again, it tightens it up a little bit, but it does give you a little bit later entry than we had before. So again, guys, you have to play around with these, whether it's you use minus 30, minus 70, or minus 20, minus 80, okay? And again, the difference is that if you use the tighter, the more conservative settings, you potentially will get a late fill, a little bit late entry, but on the plus side, it probably will filter out more false entries and more false exits too, okay? Because I said this is not a great exit indicator, okay? But it is a decent entry indicator. Now, if you look at our sells, come over here. This one, we still technically get our sell signal right here, and then price pulls back and then goes, let's see, there's no short entry on this one. Then over here, okay, we get our exit signal here. This one really makes it late. This is only at most you get 10 pips out of this. But then again, it's later in the day, so maybe you just don't take this. So, all right, here, there's no buy signal. We don't get this buy signal here because we're already in overbought up here. We do get this sell signal here later on. We had this big spike down. Maybe you didn't get in until right here. You had a little pullback, and then it fell the rest of the day. Maybe you pick up another 20 pips by the end of the day. So that's what I said, guys. You got to really play around with this and determine what's a good signal and what's not. Okay, and this is dollar yen, by just so you know. If you go out to a higher time frame, then of course you can do this on a higher time frame. So if we go to the hourly chart, okay, you can see we're in an uptrend. If you just take like from this low up to where we are now, we're in an uptrend. So ideally here we want to take long positions. That's our best opportunity. So there'll be a signal here. There's technically another signal here. Let's look for some false signals. Again, we're only looking for longs right now. All right. There's technically a false signal right in here, right? This little one here, little one here. All right, then we get another one here. Price does rally up a tiny bit. Well, I shouldn't say a tiny bit. It's 130 pips, and then it falls. And then this was the real entry, was back here. Okay, so you might get a couple little false signals. Like I said, right here. Okay, then you get another little one right here. I mean, the price is pretty muted, so, I mean, don't go blindly by it. If you look at this and say, I don't know, that doesn't really look very good, then maybe you just skip it, okay? And then right through here, we get a couple of potential little false signals right here, and then the real one comes right here, okay? Same thing over here. Here's our signal. This one you really never got a good buy signal till we got right here, so this would have been okay. And we're on a 1 hour chart right now, guys. And if you wanted to counter trend trade it, you could. But again, you're in an uptrend, so your primary should be looking for up trends, up signals. There is a sell signal right here. Okay. There's another one right here. Okay, but just keep in mind that we are in an uptrend. Then we have a false one right here. Another false one right here. This one's a little bit better. Okay, this would be a valid one right here, 90 pips. All right, here we're in a downtrend, so on this side of the chart we'd be primarily looking for short, so I won't go through all that again. It's just the opposite of what we just did. All right, so I'm just showing you guys that you can do this on a higher time frame, all right, and do the same thing. Here's a 4 hour chart. Again, in an uptrend here, okay, let's say all through here, looking for longs. All right, little false break here, Okay, long signal here, nothing here, nothing here. You would have missed this one. Okay, long signal right here, big pullback though, and then the actual long comes right here. Right here, that's a good one. Right here, that's a good one. Right here, that's a good one. All right. So you had, maybe one or so false moves, one missed signal, but you got most of them. So I'm just showing you guys you can use this on any time frame. Okay. So that's the Williams percent range. And again, guys, you got to play around with the levels, whether you're going to use again the default levels, which is -30, -70. Or the more aggressive levels, which would be -20, -80. But I would leave the period at 55. Okay, just my suggestion. And again, these are Fibonacci numbers, guys. So there's the 55. Okay, I just Googled Fibonacci sequence, and this is Fibonacci numbers. This is not Fibonacci retracement percents. Okay, these are calculated. Those are calculated from these numbers, but that's not what these are. These are actually just the raw Fibonacci numbers. Okay. All right, so there's 55, and that's what I used. 34 I found was still a little too short, and 89 gets to be too long. So 55 seems to be a good happy medium. Now, I was also backtesting this on futures, so this is the NASDAQ futures. I'm still playing around with this. I don't find it as good on the futures, but then again, I just started looking at it, so I think it's better on Forex, but we'll see. I might be able to make some adjustments to this. Maybe I change these levels on here. This is defaulted to 20 and 80. Maybe I make it 70-30 and see if that makes any difference. But it's still 55. And I probably will leave it at 55. This might be better on higher time frames. I don't know. So we'll just have to see how it goes as I backtest it. But for now, I'm just going to keep this to the Forex market. And it's, and I tested it across the pairs that I trade. Seems to be work pretty consistently across all the pairs. So again, I think the biggest thing to play around with is just the levels on the indicator. And you don't need this 50 level. This is the midpoint. So technically you don't need this. I'll take this 50. Take this 50 off of there. Okay, you don't technically need the 50. All right, I'm really only using the extremes. So, all right, guys. So that's really it. If you like indicators and you still like to use oscillators, try this one out. Put it on your chart. Adjust it to 55. Go and back test it. Different time frames, different pairs or assets. I would leave it at 55, but again, if you want to adjust these levels, but be honest with yourself when you back test it about false signals, guys. It's no good if you just cherry pick, say, yeah, looks great. But you had 2 wins, but you had 4 false signals in between that you would have piled up a bunch of losses, right? What good is that? I mean, you're going to have some losses. It's not going to work every time. No matter what you do to it, you're going to get. You'll have false breakouts and you'll have missed signals, okay? Because, you can't fine-tune it completely where it's never going to give you that. That would be impossible. We'd all be gajillionaires if that were the case. But play around with it, backtest it, see what you think. So I'll leave it there, guys. Questions, comments, please leave them down below. Smash that like button, helps out the YouTube algorithm. And if you're just finding the channel, subscribe down below, hit the bell notification so you're notified when I make new content. And I hope you guys have a great rest of the day. And maybe we'll be back to update you on some trades using this system. All right, guys. Have a good one, and we'll catch up soon. Thanks.